All right, guys, we are jumping into another episode fresh off the XRP Las Vegas event. You guys got a chance to see everything, but joining me now, of course, is Versan and Vandell coming in from Black Swan Capitalist. How are you guys?
Doing great. Good to see you,
Good to see you
Paul.
guys. Yeah, yeah.
And Paul.
I wish I know you couldn't make it in Vegas, but we would have had a good time there because there was a lot of people at the event that we get a chance to see all year round. Obviously within the show, but in general, it was a good time to catch up with everybody, but a good deal. You guys are busy though.
Yeah.
You've got a lot going on.
Well, just like you, but you were able to make it over there. I'm glad you had a good time. I saw all the videos online.
Yeah, it
Looked
was
very exciting. Yeah.
it's pretty deep. I think in general, when you look at the market where it was at the time versus what we've seen in past years, typically up markets usually means up events. This
Makes
year, they
sense.
had quite a few people attending, even though we had a down market. So interesting stuff. I want to go into the first topic today, and that is midterms. I know, Vendel, you mentioned that in the pre-show. I'm going to share something with you guys right here to give you kind of an example of what's going on with midterm elections. Right now, it is a 54% chance that Republicans could possibly reclaim the Senate. This has moved up quite a bit, which kind of surprised me when you look at where midterms have been in the past. And if you think about that and the potential of markets at the same time, first of all, what do you guys think we're dealing with right now? Do you feel like this is a potential catastrophe for the Republicans, or do you think that they might actually pull it out? What are your thoughts there? Because that may dictate where the markets go.
Go ahead, Mindell. Please, you begin.
Yeah, so my take is very contrarian, you could say. So I think a lot of it is theatrics, to be honest. Regardless who takes the seat, what side, left, right, vote left, right, up or down. I mean, the fiscal deficits will keep rising.
Yeah.
Interest rates are going to have to be cut at some point to refinance the debt. It's
Mhm.
just unsustainable for the system at the moment. And
Right.
I think at the end of the day, regardless, what side wins, the outcome is going to be the same as it pertains to monetary policy, the increase in the deficits, and really the ultimate direction we're heading in. So I don't think it's going to make much of a difference. It may in the short term, but I don't think the long-term outcome is going to drastically change. And we've
Yeah.
seen this throughout historical periods of similar election cycles. I mean, nothing really changes in the grand scheme of things from the market's perspective.
Mhm.
So maybe in the short term, but long term, the direction is obvious. We're going to have increase of the money supply over time. Rates are eventually going to come down at some point because out of necessity, financial conditions will loosen. Crypto is going to go through its cycles and that will mature over time. But
Yeah.
ultimately, even the Clarity Act is eventually going to go through because, like all historical disruptive technological innovation, it eventually gets regulated, controlled, adopted, and integrated into the broader system. So it's all a matter of time. But short term, anything could happen. Long term, I think the outcome is the same regardless which side wins.
Yeah. Well, the point is that obviously the politics side of it has really started to play out even around clarity. We're going to talk about that before we get into clarity because there's some big news out on Capitol Hill that we'll break down. And I want to kind of get your opinion on this. But before we go there, when you consider the current situation right now of the market, we had the CPI data come out bad. This does not look good for the market in general. You also had this right here, which was the issue that we're already seeing, and I'll kind of zoom in on that if I can, and that is that auto loan and credit card delinquencies now are up. So this is usually indicative of what we have seen in the past, because what Lavish is talking about here is that this isn't necessarily a K-shaped economy, but it's the system that's breaking. And you guys talk about this a lot, that the system is breaking. The issue that we're dealing with is breaking. And beyond all of that, would you say right now, based on the CPI data that we saw come out this morning, also based on, some of this new data coming in from, the consumer goods side, are we in a position yet where people will start to abandon the dollar and start to go into something else? What do you guys think?
Well, first thing I'd like to make a statement on, as far as the political system, to complement my brother's research and his insights, is the truth is both sides serve the same masters,
Sure.
and they ultimately keep us fighting with each other while the real power structures continue to extract our wealth, and
Yeah.
they're building out the next era of finance. So, just to give some context for everyone, the game is really never left versus right. It's always
It's
been us.
rigged.
It's rigged. There you go.
It's rigged.
Yeah, there's no different way to say it. It's rigged.
Yeah.
Okay.
Yeah.
Right. Well, the US dollar, I would say, is reaching the final chapter of a failed experiment, really. And Paul, we have to call it for what it is.
Yeah.
People talk about the national debt. They say it's too high. Well, the truth is it's completely out of control. And it's sadly, it's inseparably tied to the dollar itself. So when you have a system that prints money off thin air to service yesterday's promises, you're not running a currency anymore. You're essentially running a Ponzi scheme. And that Ponzi scheme is systematically transferring more wealth from the productive class to the financial and political elite. Central bankers and power players, they don't just print their way into more power, they actually print at the direct expense of everyone else's purchasing power. So
Right.
look at all of this. That's kind of the cycle we're trapped in, or we have been trapped in. We print more, we export more inflation abroad, and we just repeat the cycle over and over. And other nations, they played along for decades because the dollar was the most liquid game in town. But I think overall, nations and people alone are getting tired of it, extremely tired. And right now, we're watching the end of the post Bretton Woods system. Cash is gradually being phased out. Alternatives are being built, and the dollar, it's still widely used today because of its liquidity and deep markets, but it is losing its status as the unchallenged hegemonic reserve currency.
How long do you think that can hold though? Or so, I mean, because you think about where we just showed some stats here. Consumer debt is just getting out of hand. You're seeing the rich getting richer. You're looking at the investment class that has absolutely exploded, even though we had that retracing in the market this morning because of CPI. But how long do you think this can hold of the US dollar holding a position of power, especially now that the EU has realized that the US is no longer going to be there to back them up? Because that's been kind of the strength of one of the core strengths of the dollar for quite some time.
I mean, it's again all theatrics. The truth is, the dollar is dead as we know it. All
Mm.
pure fiat currencies are Ponzi schemes by designs.
Just a matter of time.
It's just a matter of time. But if you look at the reality, we're already transitioning into a multipolar monetary world. This is happening day by day. A lot of people talk about the Great Reset. They talk about the reset of the financial system, and they say it's coming. No, it's not coming. It's already
It's happening
underway.
now.
Yeah,
It's
exactly.
underway, exactly.
Yeah.
So the dollar is not going to vanish overnight because it's too embedded, but its monopoly, the monopoly on the dollar, the global
Yeah.
liquidity and reserve status is gradually coming to an end. And that's why you see physical commodities re-anchoring trust again. That's why you see digital rails providing.
Exactly. Yeah.
Yeah. Mhm.
Think about what is happening right now. You look at the geopolitical positions of what Trump has done. It is clear now of really the pressure that is being put on the rest of the world from an energy standpoint, which is now starting to shift the dynamics of how the United States plays with the rest of the world as well. Because what you have had is even France, I think Macron came out and was starting to push a little harder in the sense of eventually they're going to see a departure of the United States I think, out of NATO. Once that occurs, the EU will be on its own. They're going to start negotiating, who knows, with most likely the Russians and the Chinese, which will start to shift some of that, to your point, into other currencies. And it does kind of beg the question, has the Monroe Doctrine influenced Trump enough to create this, Western Hemisphere focus, which is really kind of where he's going right now, and the push towards digital assets, gold, etc., which is really the strength right now of the US. What do you guys think about that? Because that's underway right now.
I mean, honestly, in my opinion, behind closed doors, this was all decided. And again, it's a very contrarian view. People like to look at the headlines and they
Yeah.
kind of feed on that in a way. It's very strange at this point.
Mm,
But the distortions are clear. I think what they're doing essentially is having these back channels about how this is all going to end up and how it's going to play out in real time. I mean, if we even look at the regulatory landscape, and that's very important here because when you talk about the regulatory landscape, it really is a circus and again, theater. I mean, all the lawsuits, the back and forth, the endless
yeah.
hearings that you see, it really looks like confusion on the surface. And that's what we're talking about here. But it's actually perfect timing because if you think about it, it's all aligning with the geopolitical script, the way the world is kind of entering this multipolar.
The argument that always comes at me is this. All right, it's not really Trump that's doing this. It is the powers in DC that we often don't see that don't get voted in and out. And that's really the construct of what's building maybe a new, the reset system, so to speak.
Yeah.
And I think that's a factor that everybody needs to understand. This is going to become quite unique in terms of what assets to hold. Right now, everybody's sitting in money markets. You're probably going to see the bond. Well, now the bond markets are flying. I think I saw bonds now at 5%. This is going to put pressure on digital assets because it starts to make those sticky. What would you say to an investor right now that says, "Hey, Paul, bonds are paying 5%. We're getting money market that continues to go up. It looks like the new Fed chair is going to be toothless going into his job. So, how would you argue that digital assets are the place to go? Is it just buy the last dip?"
I'd love to comment on this.
Okay.
So, first of all, although, bonds, corporate bonds offer, you could say, a nominal yield of what, 5%, something like that. Yeah, in real terms, you're actually going to have negative returns, if anything, or much lower than that. Why is that? It all comes down to basic math because, sure, it's considered a risk-free asset class, more liquid, been around
Right.
forever in the eyes of people globally and institutions. Risk-free is a marketing phrase, okay? It's not risk-free when you do the real calculations because, sure, nominally speaking, 6%, 5% looks good, but in real terms, when you actually account for currency debasement,
Yep.
inflation, the monetary base, which is the money supply expansion, which is on average
Yep.
roughly 8 to 10% per annum.
Mm-hmm.
Now do the math. Plus taxes on top of that. So if anything, your returns are really negative. That's the fact of the matter. Not only that, if you take into account the outperformance that digital assets have had in every prior major expansion, it significantly outperforms anything you could make in even a decade sitting in the bond market. Okay,
Yeah.
so it's basic math. For example, XRP, every major historical cycle low it has had, from cycle low, the bottom, all the way to its peak, every major cycle expansion was more than 1,000%, more than 800%.
Right.
Okay. So even outperforming Bitcoin, if you actually look at the real math. So bonds, they're not risk free. Okay. They seem risk free on the surface, but they're not. And on top of that, we're at the late stages of a monetary era. Okay. So it does not mean the chapter is closing tonight and the system is going to collapse, but everything we're seeing all the dynamics playing out in the world, the geopolitical issues, the rise in energy and commodities, and the debasement, the acceleration of the destruction of the purchasing power of your currency. These are things you see at the later stages of monetary errors. So what that tells us is that they are going to continue to inflate away the debt. That means destroy the currency. And they're going to destroy it at a faster pace than they were several years ago, because that's historically what all governments and empires have done at later stages of a monetary era.
Yeah.
So the worst thing you can do, and this is you could say the most contrarian thing one could say, but the most unsafest thing you could do is hold bonds, actually, if
Hold
you
bonds,
really
yeah.
do the
Oh.
calculations. Yeah.
Yeah.
Especially given where we are in the monetary era. And not to mention, we're at the later stages of the business cycle, to be honest, which is the credit cycle. And
Exactly.
sure, a lot of capital fluctuates and heads towards safer investments at the end of a credit cycle. But again, when you really do the calculations, each asset class could be at a different stage within its cycle simultaneously. So what that means is, while everything is still appreciating pretty fast here, going on a parabolic move, the only asset class that is sitting in a macro accumulation zone is actually the crypto market.
Yeah, and you compared this right here. We're looking at the CPI inflation data. This went up to 3.8, inflation much higher I mean, this is the kind of numbers we're talking about. 29% on energy. Look at this data right here. I'm going to highlight this for everyone. Yeah, 2020, you're up 29% to today, okay, in 2025. So that's the kind of thing that you're getting, no matter the kind of situation that you're in right now. What we're dealing with is the debasement of the US dollar.
Of
So
the
really,
currency, yeah.
other, even with, because I think the argument that everybody will say, well, hey, listen, okay, sure, bonds are only getting 5%. My money is debasing at, 25% over the past 5 years, a good example, almost 30%, excuse me.
Yes.
But Paul, um, sometimes crypto is volatile and it takes me down. Sometimes gold comes down, and I'm like, yes, that is true, but you're not looking at the long term. We know what the long term play on inflation is. We know what the long term value of bonds are going to be. You're
Yeah.
our 10-year yield right now. So
Yeah. So I wanted to add one more detail to what you just pointed out. So the CPI data, okay, first of all the metrics are flawed. We know that for many reasons. They've revised the way they calculate the metrics. That's one point I want to make. Second of all, they're too perfect in line with expectations to be coincidental.
that convenient.
It's too
though.
perfect. Yeah, it's convenient, and it's too convenient because this happened last time as well. While 20% of the job data was magically gone because the government shut down. This tells us they're cooking the books because the economy is at the end of a credit cycle and things are worse than they want them to be shown to the
Really see.
public. Yeah,
I think
okay.
that's a very good point, is that this is a lot worse than what is being seen. And it's like, the old metaphor of, just, if you boil the toad, versus putting them in a flash hot pan of water. It is what we're dealing with. That's how they're dealing with the American economy right now.
Indeed. And the last point I want to add is the 3.8% uh, inflation that they just released, that data. What's interesting is that's the highest it's been in 3 years, okay, since 2023. But here's the more interesting part that hasn't been priced in yet. Historically, if we look back, every major in modern history, every time the oil price went parabolic, typically what you see following later are two things: a recession eventually, and actually historically the recessions are announced roughly 2 weeks after the markets have already bottomed. Okay. Now historically. Now the second thing is, every time the oil price rose significantly like it did recently, what happens is this is very interesting. Following the few months of CPI prints, they're usually up. But because oil rises, you get something called demand destruction.
Right.
So that eventually gets priced into the inflation data. So the higher inflation we're seeing now is actually temporary, and oil rising is actually a deflationary pressure, because when you put pressure on consumers and they have to spend more on energy, they
Mhm.
eventually start spending less on other things because they have less disposable income, and
Exactly.
that actually
Yeah.
feeds into the economy. But it takes a few prints for that to happen. So in a few months, that's going to be completely changed and different.
Do you feel that that acceleration, though, will ever catch up with itself? I mean, many people would say, okay, maybe now the kind of inflation numbers and consumer defaults that we're seeing are considerably higher and faster. So it's almost as if the system of that flywheel is accelerating right now. Do you think that at some point this does catch up with real, or at least somewhat real inflation that would give the American investor enough of a shock to say the new alternative system is going to be risk and also commodities, et cetera, whether it's energy, gold, you name it. Do you think that that's within reach anytime soon?
Can I make a few comments? First of all, we've been in recession since 2022. The numbers were just massaged. The headlines were BS, lied.
Yeah.
And that's exactly why the markets are mispricing risk across the board. So the illusion is still intact. Another thing I want to talk about is the reset that we talk about isn't really an event. If you look closely enough, it's policies, policy driven. And the policies that are being deployed in real time, it does start with energy because energy is the foundation of everything. You can't run an
Right.
entire economy with it, can't
Yeah.
move goods, can't grow food, power infrastructure, so forth. So what are they doing? They're actually creating pressure. I mean, if you're realistic about this and you look
Right.
at what's happening globally, we're seeing supply disruptions, geopolitical escalations. You talked about Trump for a second. This is all being done intentionally. I don't
Mhm.
want to get too far off the subject here, but the policy decisions that are being deployed right now are collectively restricting access to traditional energy sources. So when you start to disrupt energy, the consequences are going to cascade. And that's why you're
Huge.
seeing
Yeah.
fuel prices, transportation cost surges. That's why airlines are going bankrupt right now. That's
Mhm.
why food is becoming more expensive. So inflation is spiking again, and people are feeling it already. It's disrupting their daily lives. So I've seen it myself. My electric bill has gone up. I talked to my brother about this, and we can pay for it, but it's gone up by $60 for most people. That's
That's a
that's a
lot.
lot of money, right? So it's real, it's measurable, and it's sad because pressure is actually being applied across multiple systems, and you have to ask yourself what's going to happen next. I think people are going to gradually adopt to the new conditions as they always do,
Mhm.
and that's when we start talking about electric cars, smart cities, things of that nature. Because what I reported on right after this energy crisis begun, and I think it was engineered for many different reasons.
Yeah.
Shortly after, it gave me goosebumps because I saw in lockstep just the same patterns I saw with the pandemic. The IMF came out, the Bank for International Settlements, the World Bank, the United Nations, and the EU in lockstep saying that we need to reduce our dependency on oil and we need to look at smart infrastructure.
Right.
She's talking about centralized living, smart
Mhm.
cities. I'm talking about Ursula von der Leyen. If I hope I pronounced her name correct.
Von der Leyen, yes.
Yeah,
The
just when
yes.
the cost of living rises across the board, consumption is going to drop, and people are going to eat less. They're going to travel less, and they're going to depend more on the very systems that are designed to manage
Well,
scarcity.
that I would say, and not that I'm pushing back on that idea, but it is definitely, I call her Queen Ursula. That is the EU and its new framing that we're already seeing. The likelihood, especially around energy now, which they've kind of got themselves in this mess when they started shutting down their own nuclear reactors. Now you're never going to be able to even get that. Have you seen the latest in Amsterdam where they have banned adverts
Mhm.
on meat and
Yes,
on any kind of fossil fuels, including airlines, cruises, etc. They're
yeah,
banning that. So
but
I
this
mean,
is
they're
behavioral
destroying themselves.
conditioning. This is
Yeah,
behavioral conditioning,
exactly.
right? At
Yeah.
scale.
Yeah.
But to answer
So
your question, go ahead, Paul.
no, go ahead because I think we got a lot to go.
Yeah, you were going to ask, okay, will these conditions force people into
Right.
looking for an alternative investment to find a way out, basically,
Yes.
right?
Exactly.
Yeah. So The answer is yes, and people are already doing that. That's why we're seeing gambling going through the roof,
Oh,
prediction
exactly.
markets.
Good point.
That's a reflection of human behavior searching for a way out. Okay. So it's already being reflected in the markets. That will continue as people wake up to what options they actually have to potentially get ahead. But ultimately, regardless if they wake up or not, the train is leaving the station, and the outperformers are going to be, depending on the cycle where we are in the cycle, is going to be different asset classes at different times.
Well, let's
And
talk about that. Let's talk about that for a minute, because I think a lot of people always say, "Paul, you guys always talk about these global economics and the pressure on the dollar, blah blah blah." I get it, guys, because for many of you, maybe that's the issue is sometimes you have to actually call it out as to what it's going to be. We already know digital assets, and even if you put yourselves around the top 5, okay? Because I think we are gonna get into a world where whether it's through clarity, the Clarity Act going through, or it's just through distribution, because now you're gonna get Wall Street involved, all of the major companies, etcetera, whether that's XRP, XLM, Hedera,
Yeah.
probably ETH, Solana, Bitcoin is gonna be all in here. You're gonna have maybe 10 assets that have real movement here. And I think that's the key. If you're staying at the top of the funnel, you're probably pretty safe, at least on the ability of being able to grow as these markets grow. But what else would you say is an investment class beyond those?
I mean, for years, I've personally been pounding the table about physical commodities.
Yep.
Physical commodities are my number one hedge against the engineered debasement, and that's what I'm calling it. But when you look at central planners, who print without limits, we talked about the dollar earlier. Smart capital, the truth is they don't chase yield. They're chasing what's going to anchor their purchasing power in things that can't be conjured at a keystroke.
Bingo.
Gold, in my opinion, is still the undisputed king of that role. It's real monetary finality. It's now treated as collateral under the Bank for International Settlements new frameworks. It also falls into the Bank for International Settlements money flower, which is a blueprint for the future financial system. Gold still refuses to decay under the monetary policy manipulation that we're talking about here. Whether the new Fed chair switches, as my brother said, nothing really changes. Quantitative easing, all the structural resets and things we're talking about right now, gold is not going to be affected by this. Silver as well.
Yeah. Do you think that let's talk about percentage of portfolios then?
I was just going to get to that.
Okay. Where do you think is a safe percentage of a portfolio?
Okay, maybe I'm a little harsh on this, but if you look at where we are, we're actually in an early multi-decade commodity super cycle. Traditional asset managers, I looked at what they teach and what they're preaching. They're talking to people about 10, 15% allocation to precious metals. I disagree. I've been telling people for a very long time, go significantly higher. And for those who did listen, it has paid off dramatically. And this is just the beginning. Because the real war on the global stage, if you look at the Trump administration and what they're trying to do, it's not just military. It's a war for scarce resources. And we're talking about energy, rare earths, and yes, monetary metals too. So I'm telling people to go a little bit aggressive on this. And they
Would
should.
you say aggressive? Because many people would say 5% is a good.
Oh, no. I mean, I've
I'm just
gone
saying.
40% in.
So you're going that deep into.
I have been, yes,
All right.
for a long time.
Because you're probably holding little to no dollars, bonds, treasuries.
No, absolutely not, because the math doesn't make sense.
Yeah. So right now, risk assets, commodities are the primaries that you're going in on. I want to take a minute, guys, and just invite you to join the Baron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. And we have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Baron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out. What about the new innovation tech? Whether you look at what the hyperscalers are doing, you look at where AI, whether that's going to be a play on the security side, or is it maybe for those that are actually out there now benefiting from some of this recent move on gold and even to a certain extent some of the digital assets if you look at people who bought Bitcoin several years ago, where else would they go? Would they go into businesses, or do you think that that's going to be an opportunity, or where do you guys see beyond just the asset side?
I'm very cautious right now, so I'm not taking those kind of risks. I really invest in what I understand. And one thing I do understand is there's going to be an intersection as well, something I've been mapping out for many years, the marriage between precious metals, commodities across the board, and the digital commodity rails. So there you go. You have the signal, and that's very important. So according to the Bank for International Settlements, their own frameworks, gold and along with other assets, they function as a collateral layer. That's very important
Yeah.
for me when trust is being broken down in real time. And by the way, when the monetary system breaks, politics begins to break too. And that's why you're seeing the both kind of collide together. The trust is gone. Okay. And now you have digital assets that are becoming the transmission layer of commodities. The transmission layer is the mobilizer of it. One is going to provide finality and scarcity. And that's really what the world is starving for, in my view. The other is providing the speed neutrality. Neutrality is very important, and liquidity that makes collateral actually usable in a fragmented, multipolar global economy. So personally, I've been sticking to what I understand best, and until
That data.
clarity. Yeah, I mean, look at that. Even Tether, it's a stable coin issuance. And what have they been doing with the profits? We talked buying gold. They've been buying gold.
in China.
You know what that means, Paul? And I'm sure you already know this, but it essentially means that they're encouraging people to hold their digital IOUs, and they don't even trust the very same asset that backs their own stable coin. So
Well,
it's
that's
not
interesting.
treasury.
What's interesting is everybody talks about strategic reserve this, strategic reserve that. Well, the ultimate strategic reserve that is actually in plain sight is gold. That's why central banks have been accumulating gold at record levels since 2009. And that's why they've been net sellers of treasuries since 2014. So that's a strategic reserve if you think
Yeah.
about it.
It is.
Or behave
How
that
we
way.
televise it. Yeah.
Exactly. I know that from the gold bugs, this is something I talk about with Andy a lot. One of your friends is mine, and I keep recommending to him. I said, Andy, why are we not seeing these asset instruments created in the gold infrastructure like what Bitcoin has done? If you look at MicroStrategy, what they've done with Stretch, which is basically have created a credit, digital credit, out of a model in which many people would say, hey, that's a Ponzi. They're bringing money in, they're buying Bitcoin, they pay out dividends back to the new money in, blah, blah, blah. It's the typical. But gold could have done this easily.
Yeah.
Why do you think we have not seen those kind of more creative assets?
I think this is actually being done behind closed doors because if you think about it, without collateral, liquidity lacks trust. Without liquidity, collateral remains static. And that's kind of the environment we're in right now. So as I've been saying for a very long time, they're not competitors. They are complementing each other, different layers in the new architecture. And if I could be a little more brutally honest here, if you look at the entire digital asset space, there is so much noise out there and people are just drowning in it. But if you actually zoom out the picture, the signal, it's surgical. And that's why we're seeing little by little the fog is lifting. But what's becoming brutally honest as well is that there are certain technologies that are actually going to solve $100 trillion problems. Everything else in the ecosystem, in my view, is just a clever marketing wrapped around these pump and dump machines. And another contrarian view that most people don't talk about is that the truth is 99.9% of all cryptocurrencies are absolute unnecessary competition at best. And most of them are also straight up securities theater at worst. They're not building the future. They're just renting attention until the very next cycle because there's a lot of money to be made here.
Well, exactly. This is the dot bomb era all over, where
Yeah.
people would say, and I say that it's even smaller than dot bomb. If you look at it, even though many people think that this market is so fraught with this, there's always going to be innovations that come through these major shifts, which is what we're in right now. And it's likely that we may not even know one of the new ones that come out, and it could be gold oriented, commodity based, it could be integrated into AI. Who knows? The key is just like what we didn't know in 1997 through 1999 before dot bomb hit, was that there was a lot of blue sky, a lot of BS in Silicon Valley, and I call the same BS that I did
Mhm.
back then, I call it now, is that there's only a handful that's going to make it, which brings me to the topic of clarity. And clarity is on the hill right now. You got one of the kings of clarity, which is Brian Armstrong. He
Mhm.
is over there. You can see them talking about it. He's basically in their face trying to get this thing across the bow. And you look at what's going to happen on this markup right now, which is pretty significant. I think when you consider this, the significance is that we have now seen maybe a favorable bill,
Mhm.
at least on DeFi protections, and even to a certain extent yield. But again, to you guys' point, you think all of this is. Do you think we need clarity for digital assets to rise?
One last thing, I'll let Vandell speak. I'm very sorry, but I think the SEC has already drawn its lines. We've seen this. We know
Right.
what's going on there. We've reported on it. The CFTC recently dropped a joint guidance treating XRP and select few other digital assets as commodities. The
Yeah.
Clarity Act is what everybody's waiting for. The truth is, the Clarity Act is the final lock-in, and it's funny because the very same banks that are publicly fighting the Clarity Act are the very same banks who've been running the private pilots on this technology for years. So I don't think they're against the innovation. I think they're against just retail front running the wealth transfer. And that's just one thing. The last thing I'll say on um, this is what's going to give people some chills, I think. Whether the Clarity Act passes this year or not, or gets renamed, it really doesn't matter in my view. Because if you look at the reality, the transition is already baked into the cake. Nobody's really waiting for permission. They're still adopting, they're still
They're
moving
just
forward.
going.
We're just
Yeah.
watching the final chapter of the post World War II fiat experiment play out.
Yeah.
And that's the truth.
Well, I mean, you've got it. BlackRock is going, JP Morgan is going, everybody I mean, you look at the global element that's happening in Asia, especially the amount of innovation that's happening in Japan, Korea, Singapore, South Korea, Singapore is astounding compared to
Yeah.
what we're seeing here.
Exactly. So I mean, they've been doing all this research and development, investment infrastructure, building, hiring people, growing companies to multi-billion dollar, evaluations, all while there's no Clarity Act, which tells me it's an act. But I mean, it's going to go through, obviously, just like the Telecommunications Act in 1996, deregulate the markets, encourage competition, have frameworks in place, and ultimately, more serious capital
Mhm.
from retail's institution investment infrastructure is going to slowly, gradually migrate into this new ecosystem. So that's inevitable. It's coming regardless what happens with the Clarity Act and the bill. I mean, it's inevitable. Okay. We've seen this throughout history with previous technological disruptions. And I mean, at the end of the day, I think when it does go through, I've talked about this before, and it's just my opinion, but when it does go through eventually, I believe that we could see a hype driven rally
Sure.
followed by a cool off, a sell off, because smart money exits into strength, especially when it's amplified. And then a gradual migration of serious capital taking
Over
advantage
time.
over
Yeah.
time because institutional money, it moves slowly. All right. These big players around the globe, they move slowly. They don't just move overnight. Doesn't matter if you pass the best bill in the world, it doesn't matter.
Yeah,
Capital,
it takes time.
yeah, it takes
A
time.
lot of
And
a lot of capital has to get
yeah,
deployed in a short, I shouldn't say short, But in reality, if this happens in a 5-year cycle, that may be one of the fastest cycles
That's short.
seen.
Yeah,
In
definitely.
recent history, at least the last 100 years.
Absolutely. And on top of that, Paul, when it does go through, it basically opens the doors and the barriers that have been there. So once that's open, now you're going to see serious influx of capital into this space and adoption, utility, investment, infrastructure. So once the doors open, that's the final barrier sitting between the big money and this technological advancement. So, but again, it won't happen overnight. It could, anything could happen, but it won't be the dictator of the outcome immediately.
Do you think, all right, so we know your position on gold. We know that eventually that's going to merge with the digital asset class itself. We're already seeing it to a certain extent. If you just look at Tether's XAUT continuing to grow, physical gold, I know Trump still threatens that he's going to audit Fort Knox and see if we actually have that gold in there. Wouldn't that be interesting?
Yeah, it would if he actually went through with it.
Yeah, an interesting deploy. Do you have any faith in the government? Because Patrick Witt has gone on record here recently saying, "Get ready, we're going to announce a strategic reserve strategy around digital assets." Do you think they're going to do it?
I mean, whether they do it or not is irrelevant.
Yeah,
The truth is, I know for a fact the administrations, again, going back to the political class, they only do what's in their interest for them, not for everybody else.
for sure.
So inevitably, this transition is going to happen because if you think about it, the world is fragmenting. The
Big time.
political class is in big trouble right now too, along with some of the other things that have been going on. There's no more trust, and the system is cracking. And the technologies we're talking about here were designed for this very moment.
Mm-hmm. Listen, guys, we get approached by some of the biggest financial institutions on Wall Street to, I'll call it advertise, liberally call it advertise, but in reality, it's structured I think it's structured manipulation. You know, that it's not manipulation per se, but what they're interested in you talking about in our shows is very structured at how it's almost strategic in the sense of how they want to roll out certain things.
It's a narrative they want you to push.
Exactly. So we have, of course, denied them for the reason of I just don't understand what it is they're trying to do. It's not just like, hey, sell a particular product. It's sell an idea, you know, and
That's the seed.
exactly. It's sell the idea. And that concerns me a little bit in terms of where economic growth is going to be generated from. Because if we do see that transition as what we are anticipating,
I agree with you.
very creative ways for them to manipulate these markets for sure.
Oh my God. I mean, it's out of control right now. And, Paul, I want every listener to really understand this. Like, people have to stop chasing the narrative. They have to stop waiting for the next massive tweet or thread or the next hearing. Like, the signal is there. And the real move was never about getting rich quick. At this point, it's not, at least for me. This is about, it's about being positioned for the new monetary architecture. And it's already live and it's scaling. And I mean, it's happening very fast, and the window of opportunity is truly closing. It's only closing faster. And I think where this is going is really the intersection again. This is the signal I'm trying to teach people, is that gold is the anchor of value. This is not going to change. But in a digital asset landscape, how do you move value more efficiently across modern financial networks at the speed of scale of the 21st century?
For sure. Yeah.
That's that intersection there. So that's where I think the subject of tokenized gold comes in and real world assets.
No doubt. Yeah. Tokenized gold, absolutely huge. We continue to see the growth in it. I think it's just a matter of time before we get another major play on tokenized silver, which will really start to accelerate that as well.
I mean, silver is part of the strategic reserve now for critical minerals.
Yeah.
Yeah.
All right. So let's talk about this. There's a couple of points I want to show. You've got some movements out there in the market that I would say are still pro XRP and a handful of others. One is obviously here by Evernorth. Evernorth is, I had a chance to talk to Ashish
Mm.
in Vegas. And I'm kind of curious, do you like the idea of these digital asset treasuries developing around major asset classes like an XRP or even a Stellar or others? We have an H bar, DAT, and ETFs out there. Would you say that these would be potentially investment opportunities or not to be able to get access to some of these assets for people who are not necessarily ready to
Yes,
do
I mean,
direct?
that's like almost like ETF exposure,
Yeah,
really.
exactly.
You still have the upside to the adoption and sheer scale of the use case of it,
Hmm.
but you don't own the underlying asset itself.
Right.
And I think that's why ETFs are aggressively being pushed because it's a real moneymaker for the institutions. But
No
more
doubt.
importantly, it's a double-edged sword. It gives people the value and the exposure of it,
Hmm.
but I'm always taught people to there's nothing like owning the underlying asset the same way if you were to own gold.
Well, and this may be a transition. This
Mhm.
may be just a transition period.
Yeah, to get all the money on chain, most
Yeah.
likely that's probably what the real narrative is there. And I think they're doing a great thing. They're getting people the exposure to it, but it's more about getting the value on chain,
Yeah.
rolling over everything from traditional financial systems into the new architecture.
What do you guys make of this news right here? This was the Stellar Foundation announcing that there's another government that's jumping in. This is Bermuda. I know it's a small country, guys, so don't, freak out the comments. But the point
Mhm.
is that we're seeing nation states now going into entire payment systems coming into these types of assets. What is your opinion right now? If you had to call three digital assets out, what would they be for potential investment opportunities right now if you're
Uh,
thinking long term?
yeah, XRP, XLM, and there's a complementary relationship between the
Yeah,
two.
between
Talked
the two.
about that for years. And my third largest holding in the digital asset space is HBAR.
Okay, so
HBAR has an incredible use case. It's being adopted by the largest financial institutions. You have some very powerful players on the governing council. Also, their real aim is to get to carbon negative, and I think
Mm,
that's kind of part of the larger agenda to go clean energy.
yeah, yeah,
Mm,
which would be fantastic because I think that goes back into the narrative you've been talking about, which is where we'll start to see the dynamics around energy start to shift quite a bit, which
Oh
is,
yeah,
hey, this is a normal situation. I think it's growth and innovation. And I think this is the challenge that unfortunately the United States does not have the cheat code anymore. We had the cheat code in the 90s and in the 2000s. It was Silicon Valley. We no longer have the cheat code. So
hmm
we have to kind of compare ourselves, other than maybe what Elon is doing, with the integration of space and data centers and now AI, possibly clean energy around cars. I mean, he's probably the only guy I would say that would be considered a cheat, but he's one dude, even though it is a lot of companies. You
I'd
think they'll end up
be very
combining
careful.
Tesla with SpaceX? Do you think that's going to happen?
I mean, anything to get the stock higher, probably.
Yeah, yeah. I think he's
Yeah,
going to do it.
because yeah, a lot of these
But
things, some of these people, they serve their shareholders. That's the reality.
sure, for
Their
sure.
shareholders are mostly the big corporations, the lobbyists, and so forth.
Yeah.
Yeah.
Let me know in the comments, guys, if you are your top three assets. So you've heard them right here from Versan and Vandell. Would you agree with that, Vandell? Did you like those three that Versan picked out?
Yeah, yeah, definitely.
Okay,
I
so
do.
you guys are on the
Mhm.
same boat. Okay.
Yes.
Obviously, high percentage of liquid net worth into gold, also coming in from Black Swan Capitalist on their recommendations. So we're going to be covering this and a lot more because I think now that clarity gets out of the way, hopefully this year, it is going to open up a pipeline of new strategies. And during those new strategies, you're going to need guys like these guys right here.
Well, I
So
appreciate that.
And like you, Paul.
definitely get you back on the show to talk about that because I think things are getting ready to
Yeah.
very,
Um,
very active.
Yeah.
strategic playbook for your audience. Stack physical gold, stack physical silver, other critical commodities if you can, or have exposure to them.
Have you
And
seen have you
mhm.
seen any opportunities? I mean, because I always wonder for people who are stacking gold and silver, physical, Are they worried about putting too much in like one location? Do they go and hire these professional Brinks and vault services to hold it
Hmm.
until, I mean, I'm saying if someone gets above 10K in gold, you probably don't want that at your house, right?
I mean, I'd still be very cautious because if you look at the UCC laws, they were rewritten. This is something in the book called The Great Taking. And I've reported on this many times. I've tried to hammer it as well. And
Oh,
essentially,
exposure.
they rewrote the laws that in the future, if this is under the FDIC as well, the regulations can shift where they can confiscate all your assets. And I think, whether you have your gold in a deposit safety box with a regulated institution, it
Hmm.
falls under the same category. So it's just we're in a very different time right now where the entire financial system is indeed being built from the ground up. I think people should not take that risk. That's just my view on it. I prefer to
Interesting. So
hold my
you like physical delivery.
I have all my physical gold and silver and I have them spread out in physical locations close by.
Okay. So it's all distributed in essence, which is a good strategy, I think, in general. I wonder if there's going to be some businesses that get to that point, to manage, because these you're going to see a lot of movement into physical commodities.
Yes.
Yeah, it's happening already. I mean,
Yeah,
it's 100 trillion something capital migration that's already underway and it's
crazy.
accelerating. That's your wealth transfer. So again, focus on the signal, not the noise. There's a
Right.
lot of noise out there.
Yeah.
Yeah,
And
Versan and Vandell, you guys know what to do. Find them over on YouTube under Black Swan Capitalist, out on X as well. So thanks again for coming in today. We appreciate it.
Thank you. It's a
thanks.
pleasure.
Good chatting with you.